Hey everybody, how we doing? Welcome back. This is a little modified final hour. I was long, we went and ended with the FOMC session. Usually, I'm out of that by 3 o'clock because it's just a pretty boring rate decision press conference. Powell's done by 3 p.m. But the market clearly had a bigger agenda today, which was a giant meltdown for at least a couple percent. So, just wanted to spend some time live with everybody the last 10 minutes or so. I'll take a lot of my trades into the close. I've got a lot of hedges running. I'm assessing those right now. We might have some futures activity going on overnight if we have some gaps lower on the SPY and the Qs tomorrow. I want to pay close attention to that. So I'm getting some trades pending orders right now, getting them closed up or trying to. So if anybody's been with me the last maybe 2 to 4 weeks, SPY bear puts. I bought a 608 put, sold a 590. I put in a credit of $15. At 18 is my max profit. I've got the QQQ. I bought a 533. I sold the 510. That's a $23 max profit. I'm going after $16 credit. I'm going to see if that will close out. I mean, it's not until January 31st. So if this market doesn't recover in a big, ridiculous way, then it is what it is. Again, like I had some pre-market levels and live levels that were completely opposite. Market makers again defended all-time highs. This market just took a nasty, nasty spill. And this is also why for waterfall income, we had hedges. Those are all in profit right now. Those are looking pretty good. I don't mind letting those play out a little bit further because they do go out into January. So we'll assess those really quickly. But I'm going to get some credits in right now. This 510 by 533. Actually, it's a 533 by 510. I paid $5 for it, and it's paying $10 right now for profit. So I'm not going to take the profit yet, even though it's close to 100% gain. I'm going after max upside of $23. I'm going to try to get out for at least $1,000 per contract on the hedge. So I'm going to put this in at $16, and that's pending now. Good till canceled. This one, the 533 by 510. Put this one in for $16. I already have a closing order. Oh, I already did that one. Okay, good. Let's go 533 by 510. Close 16. There we go. Okay, so that one's pending. Just got to switch the accounts here. 533, 510. $16 pending. Okay, we keep working through this. 533, 510. $16. All right. So also, just to talk some logic into what happens when this type of day and sell-off occurs. I mean, we've gone from single digits to low teen IV rank, and they've just jumped up a ton. Volatility's up like 25% on the day. So what does that all mean? Well, if you're an options seller or a premium seller, things are a lot better now than they were, earlier today or for the last several weeks when we had very, very, very low volatility in the markets. Now we had some added juice. If you're a premium seller, you can go further out of the money. The swell in IV is allowing you to go further and further out from the expected move. You're probably going to get to sell that premium and see the market not necessarily go that expected move because it's all priced in. That's the beautiful thing about being an option seller. So this is why being an option seller has its advantages, especially when the market has these big IV events like it did today. So let's go to this account here, right there, putting in my close at $16. There we are. And same thing here. $16. And lastly, QQQ. Close $16. All right. So again, why am I not being super aggressive and taking profit today? Well, because I've already seen like an $8,000 or $9,000 profit swing. I was down 30K. Now I'm down 22. I'm looking at hedging. If my hedges still pay out, that'll be like $22,000 in hedge profits. So I'm going to put my profit targets in. If I take a look at my, way out of the money plays here, let me go to out of the money plays, my 10 contract, 10 contract, and 10 contract. Right now, that's up 260, 300 and some dollars. It cost me what? The hedge cost me $100. Okay, the hedge cost me $100. So basically, it is a one, two, $300 hedge. Okay, and I'm up 80 and 20 and 240. So I'm up $340 out of a $300 hedge. So I'm up 113% on that risk capital. These positions are there not to be like, oh, I'm up 100%. That's great. I mean, that it's fine. But these are there to be, I'm up 500%. I'm up 1,000%. These are like outlier type protection moves that, that $100 here, this could be $300. Okay. $300 in protection that could potentially pay me, I don't know. Let's say, I mean, if it's up $1,000, that's pretty notable. That's pretty cool. If it's up $2,000, I'd be pretty excited about that. If it's up $3,000. That's a potential profit, depending on how ugly and nasty things get. So I'm going to let those run. For me to tie up a $300 in hedge costs and rack up potentially like 10K or 10x on them is fine. Just having them sit there. Okay. All right. What other hedges do I have going in right now? Let me just go look at per account. MES. This one is a 111. This is a bear trap. This is out to the end of the year. Right now, I'm up about $560. That's pretty good, actually, because my bear trap is in profit. Plus, I have the actually might work out pretty well. Let me see what 5,500 would look like on the ES feed. Is that MES or ES? Let me check. That is MES. Okay, that is MES. Let me scroll to the top here. 5,500 is way the heck down here. Oh yeah, I mean we'd have to drop hard. We'd have to drop another almost 8% by the end of the year. Not saying it can't happen, but I would say unlikely. So buy a put. Those are looking a lot better for profit right now. Have the sell put in there. Yeah, that looks pretty good actually. Cool. All right, so that's a good looking hedge. This one here, 21.2 and 2,400. Not quite profitable, but curious if the Nasdaq takes a bigger dive to the downside. My mini. This is actually micro Nasdaq futures. NQ. These are so far out of the money. These are likely going to be profitable. They're sitting on $200 and still going to decay further. My Russell trade should be fine by this Friday. It's up $600. I'm going to take that one per account. Silver trades looking good. Got some money sitting there for December 26th. Okay, all right, that should be about it for my hedges. I've already put my profit targets in on the QQQ right there for $16. And on the SPY, which is trading at 588, I need this to get down below 590, which it is. So right now, this one's got to be close. I mean, 13 and change. I'm looking at a profit of $15 to see, can I squeeze a little bit more out of that? I mean, right now, $18 is my max profit. It's only trading for $13.35 because I have more time in the trade. This one's out to the end of December, which is not, it's not even next Friday. That's the 27th. It's going into that very, very final trading week during New Year's. So if this market, has some futures activity to the downside, then I probably hit these profit targets, by tomorrow or Friday. All in all, I'll forecast here like a rough hedge. If I have, let's say, $1,000 on the SPY and another $1,000 on the Qs, I have that on all of my accounts. Oops. So that'd be $2,000 in profit on 11 accounts. That's 22 grand on hedges, which, like I'm saying, this is why it's important. I'm down 25K in a drawdown, which is still less than 1% of my portfolio. I can make up with that with $22,000 in hedges, which gives me a drawdown today of $3,000. So again, it's roughly numbers. I haven't taken profit or anything yet, but that could be how this all plays out, where hedges pay out, and they pay out usually very well for me if I'm right, 3 times this year, April, August, and maybe now. If those 3 hedges pay out, but each one on average is 300%, 500%, whatever, it ends up, hedges didn't necessarily cost me money this year. It didn't sacrifice anything off my bottom line, which is good. Okay, so I will keep monitoring this. We have 2 more minutes for the close. Certainly a nasty day in the market, but it was much needed, I think. I would have been way more bearish going into, probably Q2. I mean, if we just continue this like crazy, stupid melt up through Q1, I mean, I'd tolerate it, but I would be hedging every month just to be safe. And so today, I was really surprised, just listening to Jerome Powell. He said way more things definitively than I've heard in a long time. It didn't sound like there's a victory lap in inflation. I think the inflation discussion is front and center now with the Fed. The dot plot has showed what the markets didn't necessarily want to confirm, is that there's only going to be maybe one or two cuts next year. I've got some screenshots of that right here. So I posted some trades earlier. My dollar Swiss is working up towards my profit target. My dollar CAD's working up towards my profit target. Those are my Forex trades working out really nicely. That took a screenshots of this. So this is cuts 25 basis points to 4.5 as expected, with projections applying 2 more cuts next year. Dollar got strong. S&P and the NASDAQ and the Dow and the Russell. VIX is up. Everything's down. Fed policymakers see 4.3 unemployment rate at the end of 2025 versus 4.4. So they're still looking at a fairly safe, pretty tight labor market. End of 2025 PC inflation at 2.5 versus 2.1. So again, way higher, right? Way higher than what was forecasted. Going into PCE this Friday, we're looking at a 2.8 previous. As a print higher, that'd be, CPI and PPI and PCE all showing higher month over month and year over year readings. This is the dot plot, which is always important. We just closed out at fresh lows on the SPY. We just closed out on the QQQ near fresh lows. And man, what a turn of events. Crazy stuff. So my 610 SPY, probably nowhere to get hit this week, not even freaking close. That was a head fake like crazy. The 540 level on the Qs, probably not a chance. Wow, like what a crazy move. Dot plot, let's talk about that. So the dot plot this is where the Fed is at right now. Okay, and we're sitting at that 4.5%. And that's where the consensus was for today's Fed. Most of the Fed, majority of them sitting here at 4.5, which is where we're at. That's 3 cuts. 3 cuts. So we're 50, 25, 25, getting us down 100 basis points by the end of the year. And that's aggressive cutting. Now going into 2025, I mean, what we don't know here is what month is the Fed looking to cut? We don't know that from the dot plot. It just shows through the year, where does the Fed see most of these rates? And it's right here around 4 to 3.75%, which is going to be another 2 cuts. All right. Now, let's see. One helpful thing about the CME Watch tool is CME Watch tool, Fed cut rates today as expected. And we're looking out to January, and you can see that the market's already anticipating a big old pause. So January, 90.3%, there's going to be no cut. The official rate is down. This should be changed. We should be sitting to, it should be 4.25. Yeah, this should be 4.25. Current rate should be 4.25 to 4.5%. It should say that. So let me cross this one out. Because when we started this year, we're at 5.25 to 5.5, and then we cut 50 basis points, cut 25, cut 25. So now the Fed's looking at pausing, okay, for January. March is a 50-50. And now the market is wanting to know, like, what do we do? What do we price in? Because now it's 50-50. This would be another pause, okay, and this would be another cut. So is it right? Maybe I'm incorrect here. Let me go to historical. Oh my God, that is a messy. That is messy. What the heck? Top line is, all right, let me go back to probabilities. So I wish I could go back a little bit farther. Shoot. I guess I can just go to the Forex Factory calendar. So we had our 4.5 today. Okay, so we were at 5. We were at 5.25. I guess we were at 5.5. All right, my bad. This is correct. So the current, this is correct. So we started out at 5.5. I got that wrong. So cross this out. We were 5.5 to 5.75 current in 2024. So that's where we started, right? Started, and now we are 4.5 to 4.75 current end of 2024. And that's where we're at now. Okay. So as I look to March, January has a 90% chance there is no activity in the Fed, no cut, just a pause. And then we get into March. This is going to be March 25th. Actually, this shows May. March is showing, oh, interesting. So January, probability of a pause. March is a higher probability of a pause right now, but again, kind of nearing that 50-50 area. May, this is still a 50-50 of a pause. I mean, now the market's like, if the Fed cuts, when do they cut? I mean, this is now talking about like a summer cut, June, perhaps. So June, July might be the first window for the first Fed cut, and then maybe holding on till the end of the year. Wow. Wow. Yeah, this is really changed. Okay, so we're about to find out. Market's down. Futures are still selling off. Futures down 3.37. Take a look at, oh my gosh, look at that market today. Good Lord. That is a cliff dive. Wow. What a day. And we're still going. You know, this market trades until 5 p.m., so another 55 minutes on futures. That is blood, blood, blood in the street. But thankfully, I've got some hedges. We'll see what the SPY and the Qs do tomorrow. If they gap lower, that'd actually be a very helpful thing. Maybe I can get some profit on some of those hedges. MES to the downside, I am long a put on MES. Let me check those very quickly. So futures wise, MES, nice little 111 trade that's up about $1,000. Pretty happy with that overall. And MNQ, this is getting closer to a potential bear put spread profit. That might be, I think I paid a couple $100 for this to maybe max this thing out near $1,000. So that would be pretty good. This one's going to be fine for most likely full profit by this Friday. Russell, that one's fine for full profit by Friday as well. I doubt we're dropping 700 points on the Russell. Silver should be fine out to the end of the year. So that's it for that account. These should be pretty similar. So I took some profit on CL. This is GC for some profit. MES, there's my 111 up $1,000. There's MNQ for a bear put spread. NQ, here we go. That one's up another $200. That's fine. Russell, same thing. Okay, a lot of these are mirrored accounts. I'm just checking. All right. So I have nice profit potential on MES. So I bought the put, and then I have a bear. It's two trades right here. So I bought a put, okay, and then I did a bear put spread. So right now, the MES hedge is up $1,000. Is it in my best interest to protect it? I mean, I guess it could max out here. There's no profit cap, which is nice. I guess it stopped at 5,500. But right now, my long put's in profit almost $1,000. The bear put side should be a little bit more profit than that. But let's see what we get. That is the hedge that I wanted to see pay out. So how much lower can we go? I would say I'd be satisfied here if MES gets down into, this would be a 100 moving average and comes back into, I mean, I identify this as potential structure there, but if we come back in and try to find this election gap, I don't know. I guess what would be disappointing is if I just see the market like respond with a sharp recovery and then it gets faded from there and just kind of fights its way back. So maybe right now I paid $57.50 for my 61.60 put in MES. Right now, the nice thing is I switch over to futures, I can take profit on these trades. So what is this trading for right now? I paid $57.50, and right now it's trading for $230 credit. Can I get like $250 for this thing? Woo! Yeah, I just got 250 credit. Very nice. So now I'm left with a bear put spread. That was a pretty darn good fill. 6160. I'm gonna see if I can get 250 for this thing. 250. Okay. All right, I'll crunch the numbers on this in just a second. So that one already filled at 250. That one doesn't have futures. Oops, let me go. That one's good. This account should have futures, yes. Close. Let's go 255 maybe. Getting a little greedy, but filled at 255. Wow. All right, I'm getting some pretty good fills here. $250. Filled at 250. Close. 250. Getting closed out there. Nice. This one, no futures. This one is good. Very nice. Perfect. And did I get this one to transfer in time? Yes, I did. Love it. Cool. Okay, so let me look here and see how that played out. So that was 250, 250 minus 58, 192 on a 5 multiplier. Yeah, so $960 profit should be pretty good. So I'm protecting. So I've got MES, SPY, Qs, and then way out of the money puts. Those are like, I'd get lucky if those pay me a lot of money. But the other ones, if I get 1,000, that's $3,000. 11 accounts. That's a lot of hedge potential to offset my entire drawdown today. So yeah, better than nothing. Better than getting my butt kicked. So let me go MES. Search for it. MES 6160. Jump to that trade. I'm going to add this one in. This is going to be reply. MES update. Profitable hedge. Closing for $250 credit. Paid $58 debit. Very nice. Hedge gain. Nearly $1,000 profit on one contract. Okay, so that trade is good. I'll keep an eye on the SPY and the Qs for tomorrow. I'll see if this market has any additional juice to the downside. We're still looking to sell off, which is totally fine. It's doubtful that we're coming all the way back to 5,500, so I'll set that. Oops, 5,500. Bear put spread lows for max profit. But if we get there, awesome, because that would be a 6,000 by 5,500. So if we have further downside, it's defined risk. I think I'm risking like $1 to make $5 or something like that. It's a pretty like rewards risk friendly trade. Okay. The one thing I didn't love today is the 10-year yield. This is the bond market really saying that the Fed is messing up the whole market right now, and inflation is making a run. Bonds are dripping down hard. So bonds Short term down over 0.5%, 7 to 10 year down over 1%, 20-year down 1.63. I mean, this is the hard part about like correlation. It's like bonds and stocks have been correlated higher than ever before on record. It's like a 75 to 80% correlation right now. And so when you see that, yeah, the S&P is down 2.9, almost 3%, Nasdaq down 3.6%, Dow's down 2.5%, Russell's down 4+%, bonds are down 1.6. What happened to safe haven? So bond market's not behaving in a safe haven, not behaving in a safe haven. I just caught that. That was good. Anyway, but it is what it is. So this 10-year yield is the one chart that's making me pretty nervous going into 2025. This is where I think things can be a little bit nastier. If the 10-year yield continues to rally, this downside protection is going to be very, very important because we could quickly have a cleanse, right? And this could just be, look, like today's event could start to trigger and spark a lot of profit taking. I mean, it's crazy to think like one spillover like this can make people panic. And so is this the time where everyone's going to be buying the dip, or is this the time where we come back into this election candle, we do all the good for the year, and we had this vol and this vol and then this vol, like who knows? But based on this bar count and based on this momentum of this daily candle, if this is push and push and push, and we get closer to that 200 moving average, I will patiently wait to add positions and exposure down here on a healthy, roughly 10% correction. I'm not really looking to get too aggressive earlier than that, So I'm going to wait for like a 144 to a 200 and play the game. Okay, so if we pull back deeper or there's more downside, more downside coming, I don't think this happens necessarily like all in one go, but you never know. Futures market maybe rips lower overnight and it drags the spine of the Qs down another $3, $4, $5 to the downside. If we have a big fat gap to the downside tomorrow morning, it might be tough. Daily profit play members, we might just stay the heck out of the market for the rest of the week and take our winners. I mean, this week so far, what do we have? One, two, three, four, 5 for 5 for the week. I mean, all hell might break loose Thursday, Friday. And I don't think there's any reason to force it. IV is way higher, which is good for premium. But man, it's like, I don't know what we're going to get tomorrow. So, I mean, it's that time of year where it's like, look, we've had a 5 for 5 week. I'm happy saying maybe we don't have to trade Thursday, Friday. It might not be a terrible idea. Waterfall income trades, if you're in that service with me, we're going to ride some of these out through the end of January. And if there's a market recovery, so be it. If there's not, I'm also talking about maybe taking some ownership. If I take ownership of the QQQ or the SPY, I'll probably do that. But most likely not until we get to a very, very attractive level that I could say, if I own this, I can repair it. So where would that be on the SPY? I'd want to see the SPY down to like 565 or lower. Okay. And I'd want to see the QQQ probably pulling back to like 490 or lower. And honestly, if I'm going to pick, I'd say like 480 or lower. So there's still, plenty of downside potential. But look, this market, like one day doesn't make a trend. And so today's move could be completely washed by tomorrow by maybe half of that, right? But it could be a dead cat bounce and we have like, a big sell off and then a big pop up here and then another sell off, another pop up here. And it could just be like a really nasty, volatile swing. Or I mean, and part of me, and maybe this is a cynical side, but part of me is like, you know what? If you're going to start this momentum, just get it over with, right? The same type of quickness that we had there in about a month. This was middle July to early August. We had about a 2 to 3 week window for that volatility. I mean, if we can rock this thing out in like 2 to 3 weeks, and this is like the worst Santa rally ever in history, that'd be kind of nice. Because it's like, look, just give us the cleanse, and then let the market figure out how to claw its way back. And if I claw back here, and I get some trades back up towards these all-time highs, so be it. And also think about this, okay? The market, think about just numbers here. The market could be down. Let's say the market drops like 5 to 10%, okay? If we get a 10% correction and I'm just going to use the NASDAQ as an example since I have the chart up. If we get a 10% correction in the NASDAQ, let's see what that is from the top to bottom going down to the 200 moving average. That is around a 12 or 13% correction. Okay, let's see where we're still at for the year of trading. Starting in January, which would have been right here on the daily time frame, this is the NASDAQ. and we have been up as high as 33% for the year. So if we give back 10% of that, the Nasdaq's still up 20% for the year. That's still a heck of a gain on an index, right? Now, did you time it perfectly and did you get out at the top? No. But still being up 20% for staying invested is a pretty darn good year. SPY, same thing. If we're up 20, 6, 7, 8% and it sheds 7% or 10%, same type of thing. Now, if we do that, this is what the market can celebrate. The market can say, okay, we dumped here, maybe we go down a little bit further, and for the year of trading, we could still be up, okay, 20 plus, I'm drawing it like an idiot here. We could still be up, okay, we could still be plus 20% for year to date. Going for the year 2024, we could still be up. Also, we could start 2025 at a discount. And what would that allow 2025 to do? Start at a discount, establish some positions. If the market finds a way to grind back towards these highs again as a target, maybe we can get a 10, 13, 15% upside, but we started a discount. And you could still have a bull market in 2025, but what does you have to do? You got to have some cash at the ready to invest at the lows. So, we could have a way to, I have been actively hedged for the end of the year and going into January especially. So it's like, I think right now, if there's more downside, I am thankful that I've been hedging, and it's been a persistent, like, cat scratch of like annoyance, because I'm hedging like every 30 to 45 days. September didn't hedge, right? I mean, I hedged like every month this year. September was a worthless hedge. October was a worthless hedge. November was a worthless hedge. I did it just in case, but they were all losing hedges. And then August paid me, April paid me, and December could pay me. So I could have 9 losing months of hedges, but I could have 3 winning windows of hedging, and it ends up making me maybe an extra, 3 to 5% to my bottom line. Meanwhile, I have cash at the ready. I can still have money to deploy in the market at levels that I want. And if I was able to get 2025 at a discount, I'd be happy. I'd be really happy. So if I can get a discount in 2025, where would I want to get in? Probably somewhere in here, right? Give me a discount, establish some positions, and then see if we can grind our way back up to these highs, And so the year finishes on a positive note. We start off 2025 on a rough patch, but we're not negative. Look, it's a clean slate. 2025 is 0% January 1st, right? So even if the market is down, 7 to 10%, who cares? It's 0% according to the slate of 2025. So if it gets its way back up to those all-time highs, that's a 10 to 15% rally. I mean, if you're invested here, that's a gain on the year, So a lot of good things could still come of this, but I don't know. I mean, again, I'm not the crystal ball guy. There's no such thing. But I play the game and I hedge when I think it's necessary. I think that the stuff I read out this week, I mean, I have been frustrated with the level of complacency and the melt up we've seen. And that is also why I talked about this week. Did I not? If anybody was with me for our YouTube sessions, we talked about how ridiculously bullish people are. The most since the 80s. Okay. Buffett with the highest cash on record ever in Berkshire Hathaway. The most bullish since 2022 when everyone was levered to their teeth, right? Sentiment outstretched for 12 months like higher than it's ever been. Positioning on futures, crazy bullish, higher than it was in 2021. Okay, leverage ETFs, higher than it was back in 2022. 100th percentile positioning on risk appetite. Exposure to stocks like never before, like crazy overexposure. Mutual funds are mega bullish. Small retail is insanely bullish. Consumer sentiment is crazy high. It's just like the list goes on. It's like it's checked all these boxes, and I get it. The market can still go higher, but holy crap, we're talking about outlier type moves, right? And another thing, well, again, it doesn't matter. I was looking at like the advanced decline this week. I was looking at the, how many S&P stocks above the 50-day moving average, and this is another spot. Look, if everyone wants to know how bad it's going to get, let's say that this instrument goes lower. If we have the percent of stocks above the 50 moving average all the way down to like less than 15%, I'm going to start looking for buying opportunities, right? Maybe not for the stocks that are beat up, but maybe just for the index itself because it's so beat up. So there's room to still fall. And in a way, for my hedges, I hope that it does because it will pay out. So, all right. Anyway, DAX short finally paid handsomely. Nice. Big Mike, you're the one that did some Python coding on the highest ever, like overextended, even though that wasn't true. But you were short the DAX, right? Is the VIX spike normal? Yeah, in a volatility event like this with a 2 to 3% sell off, it's totally normal to have like a 20, 30% spike in VIX. Absolutely. Yep. Like this is what the VIX does. It's, and this is why it has the name fear gauge. Oh, 73%. There is no way that, I guess that's right. Yeah, look at this thing. VIX. Look at that thing. Oh, wow. Wow. And ladies and gentlemen, we have two very harsh volatility events for 2024. And this isn't over, right? Like when this started to accelerate, it got a little bit worse. And so having one big day in the VIX, man, I mean, if we have one more big day in the VIX, that could put that could definitely help to the hedge side. That could offer some incredible discounts on positions that I've been waiting for patiently for months, and I could have some discounts offered up within a couple of days, which is crazy to think the market behaves like that, but it does. These cycles are so much faster than before. Yep. So that is a crazy, crazy move, and it does happen, right? I mean, look at this when we had that big July August move. I mean, some of these jumps, that VIX spike there was up 46% in a day. That VIX all the way up here. This is a little bit of an outlier move, but we still had from low to high up. Let's see, that's up 15.65 points. That's 67%. So yeah, very comparable to what we had in. I mean, I guess that'd be August 5th, right? Yeah, the August 5th like VIX play, and it went way higher than that. But I'm discounting this one because if you look at VXX, which is VIX futures, this was what the VIX actually did. We went from gaining to a gap up to then fading all the way back down. So the VIX wasn't as tradable as what the market looked like. Plus, it was over the weekend. And I was in it. Like I was in it. I was long VIX. It was very difficult to get what you wanted out of that trade. I had some out of the money calls. I had some bull call spreads. I had some profits, but it was not nearly what I wanted it to be. And look at the difference today between VXX. Okay, that vol event we saw back in July to August is way bigger than what we saw today on VXX. So there has to be some additional follow through on the VIX for this to be like anything comparable. But yeah, it's still right there. This just shows that there's a big change in volatility in the S&P. Okay, this represents the volatility of the S&P over a 30-day window. That's just a big change, and all of a sudden now all the market makers and all the institutions and all the mathematics and everything that goes into the options chains, they're all changing aggressively based on a big vol event like that. Okay, so anyway, Penny, let me see your comment there. Slight different levels at 10.10, out at 130 before the Fed. That is very smart. Made just over 3K in my brokerage. Very nice. 2K in the IRA. Love the daily profit play. Penny, you're killing it, Penny. That's awesome. That is awesome. All right. Anything on the pre-market? Post-market is down a little bit. Post-market is down about 80 cents in the QQQ. Futures market is starting to stabilize a little bit, but man, what a giant nasty drop that was. Futures market still down over 3%. NQ down almost 4%. So we will see where the day takes us, but holy shnikes. So, all right. That being said, I just wanted to jump in. I did a FOMC session with A1 Trading at 1:30. We extended into 3 o'clock because Jerome Powell was still talking. His Q&A lasted well through 3 p.m. The markets are obviously dropping, and I just thought it was important to make sure like we're on the same page, right? So daily profit play, this doesn't really matter because what do we do every day? We just try to trade the SPX. Waterfall income, this doesn't matter unless we get assigned. If I take on any assignment, we'll talk about it. I don't mind taking on assignment as long as I feel like it's at a level that I'm interested in owning. Okay, so there might be an important spot on the QQQ or the SPY to consider some form of assignment. Now, as I mentioned, if I'm going to own the QQQ, I'd like it to be way the heck down here, which may not be the case. I might just take the loss on the trades. We're only in 4 positions right now. And the sad part is we're in these 4 positions sitting near these all-time highs. So if this is enough to derail the momentum and start to grind a little bit lower, then we're going to take some losses on waterfall. And our 34 for 34 is going to be in jeopardy, and we're going to lose a couple of trades. But If I take some ownership and I can wash away 1 or 2 or 3 or 4 of those trades, depends on if I take ownership of the SPY or the Qs, it doesn't really matter to me. But obviously it's going to be dependent on what type of dollar allocation I'm willing to throw at it. I can take ownership on any one. So if I want to own the SPY, I can. It's probably less volatility. If I'm looking for a recovery and maybe a faster rip, I think the QQQ could be a little bit faster, right? But also there's more potential downside. If the Mag 7 starts to roll over, the SPY is going to go down a lot faster. I'm sorry. The SPY is going to go down a lot less than the QQQ. So the Nasdaq will be very volatile to the downside, where the SPY could still sell off, but at a fraction. You can see a good example of that today. 2.98 versus 3.61. That might not seem like a lot, but let's say you're getting half to 1% more volatility every single day in a down move. Or what we've seen lately, which you're getting these 0.25s to 1% higher moves, and we've had 4 out of 6 or 4 out of 7 all-time highs with the Nasdaq versus the S&P hasn't made a high since a couple weeks ago. So anyway, the Qs are cheaper to own; they're more volatile. The SPY is a little bit less volatile, but it's more expensive. So if I want to take ownership, I do have to consider that. Do I have the buying power to own? The answer is outside of this account, which I might end up clearing up. I could probably clear up about 40 grand in this account real quick. Let me see what this one has in on MO, because I've got 1,000 shares in that. So MO, 1,000 shares, they're covered. I mean, I could just take profit on this one. And if I want to take assignment, I can. So I might look at closing this one out tomorrow. Let me see what I can close this out for. I've got the shares, I have it covered. Close this thing out. Man, it'd be nice to close it out at $50. I mean, I guess it's pretty darn close. I've already collected a lot of the credit on this. I think I can't do this till tomorrow, but I'm only 13 cents away from my covered call strike. I might just take the profit and get the buying power back. So that would give me, and same thing on this one. If I take cash on this one, yeah, like those two accounts right there, if I can get those another, trying to think, it'd be another like 40 grand in buying power. These are IRA accounts. That would give me $80,000 in buying power. I can handle 100 shares of the QQQ or the SPY, and I can work this entire portfolio pretty aggressively for some income trades. So I'm going to watch this one tomorrow. That's a good note for me to go MO and look at profit and get the buying power back. So BPP for buying power, and those are the two accounts that I want to focus on. I could do it elsewhere as well. I mean, I've got MO on pretty much all my accounts. It's been a really good trade for me this year. But yeah, that's something I'll have to manage tomorrow. But that's a pretty nice drop. And I could get it where it's like I don't lose the stock, but I put enough capital into this one. I'm just looking at taking some profit. So I've got like some 52.50s. I got some $50 calls. If price is moving lower, like I'm happy to get this thing called away at $50. I've lowered my cost basis all the way down to like $40 or even $39. So I'll be happy to take the profit. Anyway. All right, I'll wrap it up there for a little bonus session. So I didn't officially do the final hour; it's extended the FOMC session, but we'll do it again tomorrow. We'll be live for final hour. I may just assess the market. I don't know what's going to happen. I'll be watching futures overnight. Is there more to the downside? Let's find out. Currency strength: dollar got super strong today. Is there more to come for the rest of the week? Did the Fed just put the market in motion and kind of ruin the Santa rally? Very possible. If you look at where this thing is, that is a giant slap in the market's face for momentum. Right? Like this market was just inching out all-time highs. But look, market breadth was thin. High concentration, crazy amounts of sentiment, extreme readings across a lot of macro outlooks. And then today happens. It's like, okay, very quick cleansing that I think the market needed. It's wild how it happens in a day. And now we have this potential election area that could be a gap fill. If we fill this gap, okay, fine. If we come down and do a little bit more damage, to this like pre-election area, I would be okay with that. But where am I going to get interested in scooping up some buys or maybe even taking on some shares? 144 to the 200 moving average. in that area, I'll stabilize, I'll sell some premium, and we'll see what happens going into Q1. But if I can repair those for 5 or 10 bucks a share, I mitigate a lot of the risk. I'll wash away anything that I lose on waterfall income, and we just keep grinding. So, all right, I'll let you go for today. Before we go, thanks for being here. Thanks for tuning in. I know it was an improvised session. I threw it in my Telegram, but click the thumbs up button for me. I appreciate that, and we'll see you again tomorrow. All right, thanks everybody. Bye.